So we're not per se in a space where we say this has only 21 million shares and it will never be more or less, but it can be more if there is additional capital raised. But that also means that the increase of tokens, so a dilution of others, only happens if more share capital enters the company. And that's the process that we chose to make sure that every token is represented by actual value in the company.
Okay, hello everybody, and welcome to a new episode of the Bitcoin Equities Talks. Today I have with me Sascha from Green Mining DAO, and I thought his business model is quite interesting to share with you guys. So please go ahead, Sascha, introduce yourself and your project.
Hey Jed, thank you very much for having me. It's a pleasure to see you again. Yeah, hi, my name is Sascha. I'm currently in Paraguay, Asunción. I'm one of the co-founders and currently CEO of Green Mining DAO. And I think that may be enough for introducing myself and the position for now.
Yeah, so maybe before you go into the business model of Green Mining DAO, if you can walk us through your Bitcoin story and what led you to create Green Mining DAO, and then you can go perhaps more specifically about what's unique about this project, which I find quite interesting and quite unique.
Thank you so much for saying that. Well, I mean, how much time do we have? So, I mean, look, I'm not a software engineer or a hardware engineer, so I'm not coming from that perspective into Bitcoin, but my background is in hotel management and business administration with a focus on finance and investment management. So there's some connection to the financial industry or financial system, finance system. But basically, I have been active in various startups in my career and always industry agnostic, but they had two things in common, and that was technology and community. And while I was working on a different startup, I found in 2012, I found out about Bitcoin through an online store that actually offered to pay the goods in Bitcoin. And I just got interested, and the curiosity that is also, shown in my very diverse career, I think, got me into looking into Bitcoin. So I Googled it. I went into forums, tried to understand what is this magic internet money, and actually bought the first couple of Bitcoins with cash in a bar in Berlin. And that was still KYC free and very exciting and interesting moment for me. And then ever since I stayed connected with it, dove deeper into Bitcoin itself, also everything that is related to it, be it cryptocurrencies. I went through the whole ICO craze and, went into the clown coin direction and then went back to understanding, okay, Bitcoin is the only thing. Experimented a little bit with mining, bought first couple of own miners, did some cloud mining with Genesis. There's all sorts of things that I did throughout the process of getting into it as a technology and innovation. That being said, throughout the whole process, I never really in that time thought of working in that industry because I always was, busy with a startup in the health tech industry or in the leadership development industry, or with a consulting firm that we did innovation and process innovation and business model design with. So my focus was not on Bitcoin as a core to work in that industry. But I always stayed very interested and curious. But then after my last activity in my last startup, which was the Argonauts community, I then went into thinking, okay, what do I now want to focus the next 10 years on? And it was very clear that after these touch points within Bitcoin and understanding it as a financial asset and a new financial system and infrastructure, I really wanted to spend my time there. So that's how I then got into it and tried to figure out what to focus on and where to start. And since I'm not a software developer, it was not developing a wallet or an exchange or anything. But I personally thought that Bitcoin mining really is at a core of Bitcoin, securing that network, because without mining itself and without that industry, we don't have the independence and decentralized network that we currently have. So that was what I wanted to focus on. And there's many things. It was not this one moment, right, that said, okay, now I have the epiphany and I will do this and that. But it was more of a long journey. And I think one component of me focusing on Bitcoin and Bitcoin mining and trying to innovate a product here was I personally invested in a company called Envion. I think it was 2016 or 17 when they did the ICO. It was supposed to be a mobile Bitcoin mining company that would take stranded energy in different locations and then mine in containers. And if the stranded energy was, consumed, they would ship the containers to somewhere else, if I remember correctly.
Okay, so I didn't follow this company. That's new to me. So what happened with it?
Well, they never took off. So they raised, I think, a double-digit million amount in their ICO, and or if not more. I don't have the precise numbers at my hand now, but they raised a lot of money. They got a lot of attention, but it turned out they never really got into production or built their product out. So supposedly there was like one showcase container that did not even have mining rigs. I think back then it was still GPUs, no ASICs, or mainly GPUs, a couple of ASICs, but not in their focus. But it turns out they never got into production. They never started building. So the thing was a mix of a internal dilemma with the team and a scam to the outside, and it never was really clear. So that was sunk money. And so that was one experience with me getting into Bitcoin mining from a private perspective and losing investment myself. Another experience that I had was, with cloud mining, where I purchased hash rate, but then after I think 4.5 months or so, that hash rate supposedly was not profitable anymore, and it was turned off. And I was pointed at, yeah, well, this is in our terms and conditions. If you purchase hash rate and mining power with us, but then it's not profitable anymore, we can turn it off. That was another negative experience, which I ended up, leaving cash flow negative. And I think the third one really was when I then decided, okay, purchase my own Bitcoin miners, ASICs, then, and position them with a company that does hosted mining. And literally one day after I ordered the miners, I got told by a friend in that industry that I basically paid twice the amount that I should have paid for the miners.
Oh,
And that was already frustrating. But then they were plugged in. And I think about a month or 2 months after them being plugged in, the energy price was increased by more than 30%, which was another frustrating situation. I was like, oh my God, what is going on? And then I mean the last component that really got me disappointed and disencouraged of that was when I found out that they were not using hydroelectric power as they promised, but actually gas and oil and burning coal. So there was two plants that were connected, but they were not on sustainable energy. So I think this was in addition to my curiosity that got me busy with Bitcoin from different angles and perspectives. That was one very specific experience in the Bitcoin mining industry that got me frustrated. And since I personally think, and I mentioned that before, since I personally think that Bitcoin mining is one of the absolute essential or the absolute essential base layer of Bitcoin itself, besides the Bitcoin code, I think it needs to be, or I think there's room for innovation. Yeah, that was, I think, the general approach.
so basically, you went through all these experiences as a user or as an investor in Bitcoin mining, and you got like all these setbacks. So I imagine that's one of the reasons why you decided to launch your project. But what kind of innovation are you bringing to the Bitcoin mining space?
Yeah. All of these moments paid into us creating the company. But eventually, one final moment for getting into Bitcoin mining, and I want to just touch that before I go into the innovation, was a friend of mine and a good entrepreneur. He had a solar power plant, and he had a contract with a governmental institution that was purchasing the energy. And then at one point in time, they were still consuming the energy, but stopped paying for the energy. And he was, asking me, hey, and we got in a conversation thinking of, okay, how can we still, make this asset that was sitting there producing energy, not being paid for, how can we make use of ours for him and ourselves from that energy? And that's where then, all of these items and all of these moments in time fell together, and we ourselves invested a six-digit amount of money personally to build up a first mining site and get into the industry. And that's really how I then stepped into the industry itself. And then from there, it was a journey through how to democratize it, how to make it more sustainable, and how to optimize it on an ongoing basis. So put this all together, I personally think that Bitcoin mining should be, or is the only way to access Bitcoin below product or actual market cost, right? If you look at Bitcoin today, I don't know, I didn't look at the price this morning, but I guess it's about 50,000, 51,000, somewhere there. When we last checked last month and did our analysis for how much we produced the Bitcoin, it was around $24,000 per Bitcoin that we had as production costs, including amortization, depreciation of assets, operations, rent, energy costs, everything in there. So you see there's a huge spread, like 50% cheaper. You can get Bitcoin by producing it yourself about 50% cheaper. Obviously, that depends on halving, on difficulty, and your own energy, all of these things. But the problem is only the big guys really have access to that asset or to producing that asset as a lower cost, because Bitcoin mining is capital intensive. It needs very cheap energy, and there's a lot of knowledge that you need to bring to the table, be it software, hardware, macroeconomics, Bitcoin itself. And I think that all of these challenges keep retail investors away from investing into Bitcoin mining itself or running it itself. So we thought, how can we make it accessible to investors with smaller wallets, yeah? And start getting people in and still benefiting from the cheaper production cost. So that is one component that we focus on, and that's why the company is called Green Mining DAO. Yeah, we're trying to build a decentralized organization, and I on purpose didn't say autonomous because it's not fully autonomous, because we actually do operate with a Swiss legal entity in combination with smart contract and tokenized shares. But through this process, we allow people to access shares of a real Bitcoin mining company without going through the Nasdaq or other platforms, but in a decentralized manner, and benefiting from the production. And other than there's a few publicly traded companies that perform very well, but they don't pay out Bitcoin, if they even pay out dividends, but they don't pay out Bitcoin in dividends. And that's what we do. So our concept is give people a chance to participate in a real Bitcoin mine and produce Bitcoin at production cost, receive the Bitcoin on a quarterly basis as dividends into their wallets, and also be secured by Swiss corporate law. Because we're a Swiss-based company and not just on-chain, and therefore investors do have security that is backed by a legal system. So that is one innovative component. And if you want to sell the shares again, you can do it on a tokenized, decentralized marketplace. So that's
Okay,
one.
so basically what you did, just to sum it up, what you did is you created a company in Switzerland. This company has shareholders, and you have tokenized the shares of these shareholders. So you raise money from shareholders, and they get this token that they can then trade on the secondary market, and they get exposed to the business model of the company, which is to go and deploy the capital into Bitcoin mining rigs
Correct.
all around the world, I suppose, or you have a certain destination or a certain thematic. I heard you're sensitive to renewables, so
Yes.
I suppose this is where your area of focus is.
Yes, so that's a good question. The goal is to be fully global at one point in time. Yeah, we started our own operations in Europe, Middle East, and also in Asia. Right now, with Green Mining DAO, we're operating in South America mainly, and looking at other continents. And we have our first two sites launched, and we're currently launching the third one, which is also supposed to be in Paraguay, where we're using hydroelectric power, 100% renewable. But we're looking at launching in another country this year with Green Mine 4. So just to complete your summary, which was very well, maybe you want to pitch this to something, because you actually do it very well, and I understood it better than with my own explanation. But every single site that we're building, every single mining site that is between 2 and 8 megawatts in size, is tokenized with its own entity and its own token. So investors don't have to worry about future rounds coming in being diluted, or how do we value investors that come in February versus investors that come in August. It's very specific on one single site. We tokenize it, and investors are holding exactly this one specific token. And our vision is that one point in time you can build yourself a portfolio of a couple shares in a Paraguayan Bitcoin mining farm that comes with hydroelectric power, and then a couple of other shares with an Indian Bitcoin mining farm that comes from solar power through net metering or grid balancing 24/7, or one in Sweden that also uses the heat for offices and so forth. So our idea is make Bitcoin mining shares a part of the portfolio, which produce regular returns in Bitcoin directly to your wallet at production cost. and thereby diversify also the risk. So that's one. And then you asked about the focus on sustainability, and that's another component. After figuring out how to make this accessible to retail, the second big portion of our R&D was how do we make sure that the Bitcoin mining that we do is sustainable. We all know the headlines. Yeah, Bitcoin destroys the planet, Bitcoin mining heating the oceans. And only recently, with studies as published by KPMG about the impact of Bitcoin mining, or Daniel Batten's work on how Bitcoin mining can, through flared gas, really decrease CO2 emissions or CH4 emissions by turning it into C, but that's too complicated. So only recently we've seen a shift kind of in media, at least in some media, towards, hey, Bitcoin may not be so bad as we have said over the last couple of years. But that being said, when we started, it had still this very, very negative narrative on it, and we knew that, okay, with Bitcoin mining you can actually access or use energy in remote places and thereby build out grids, build out renewable power plants. We knew that with Bitcoin's fast, go live phase, you can also, like it is done in the US and other countries, turn them off if energy is needed from someone else, or turn it back on if there's excess energy. So, and we're also aware that you could reuse the heat. So I think people in the industry are very aware that Bitcoin mining itself is everything else than harmful for the environment. And we thought, how can we make this more visible, more present? And one is obviously named Green Mining DAO. It is a very specifically chosen name so that you already in the name identify, okay, it's green Bitcoin mining, and it's also operated as a DAO. So that's one. But then now, how do we really make it sustainable? And our idea is make it fully circular. So we're using 100% hydroelectric power. There's some other sustainable processes that we focus on with team, with water usage, and so forth. But in addition, our idea is how to make use of the excess energy. In this case, it is heat coming out of the miners. That's between somewhere 60 and 80 degrees Celsius, that depending on the miners and how you make use of it. And we're right now filtering and funneling the air and then drying fruits with it. So in December, we
Oh,
launched
wow.
our
Okay.
Yes. So we
That's
launched our first sub brand, which is called Bitcoin Mango, and I actually prepared a bowl here. It's actually very beautiful, juicy mangoes that are collected. Otherwise, like they're collected, cleaned, and cut, and then they're dried just by the heat of of Bitcoin miners, and they taste so juicy. Yeah, they we have this funny slogan: they taste like real juicy financial freedom.
I love the fact that you are recycling even up to the heat that is generating from the Bitcoin miner. And in Paraguay, from my understanding, it's mostly hydro, the source of
Mhm.
energy, and they have excess of energy there. So in a kind of way, you're helping them maintain and finance their existing renewable energy sources for the government by mining there, right?
Yes, correct. I would say that Bitcoin miners are a very good clientele for hydro or solar or wind or any renewable energy plants, because we take a very stable and steady amount of energy that is very plannable, and therefore I think very welcome customers for sustainable energy or for renewable energy power plant owners, because you can, other than a factory that may turn on and turn off their production paths, you have a very stable consumption of energy, which makes it very projectable and plannable.
Yeah, it's an amazing demonstration of all the virtuous effect of Bitcoin mining when they are channeled in the right direction. And that's what I really like about your project.
Thank you.
Going back to the DAO and the organization, I mean, you describe it very briefly and very efficiently, but the whole regulatory and legal and technical aspect of setting up a company and then raising capital for this company, tokenizing the shares of the company, listing the tokenized shares of this company. This must have been a lot of work that you have done. Can you walk us a little bit through, like, how did you solve all the difficulties and what kind of difficulties you encountered? and how did you solve them?
Yes, that's a great question and one that keeps me up at night. I mean, what the main challenge that we're encountering is how do we make how do we decentralize a real world asset, right? So we have real world data centers and want to make them accessible to third parties. And again, we didn't want to do host mining, we didn't want to have cloud mining or sell a hash rate or something, but we thought the best and most secure way is to give people an actual share of the company. So as you mentioned, the stock of the company. But also we didn't want to go to Nasdaq and make this a big Nasdaq listed company. So the way forward is identify a country, and there's only a handful of countries out there where this is possible, that have a legal or a legal setup which is feasible for those kind of DAO and decentralized structures. And Switzerland is very, very positively positioned or well positioned to do that. So the first thing we needed to do is analyze what country fits. And we looked at a couple of countries. Again, Switzerland was the one we chose. And then it is the next step. How do you change the articles of association? What components do you need to make sure are part of the statutes and of the shareholder agreements? And this was kind of a long process, more than 1.5 years, until we got to the final stage with a very good partner law firm, Brunner and Lawson, who's an expert in that. We figured out all the, had some pitfalls and had some challenges, and the first
Yeah,
contracts.
yeah, because just to distribute bitcoins on a continuous basis, even if you're shareholder, it's like a dividend. So you need to have a continuous dividend paying company. That alone is like
Yeah,
challenging,
exactly.
legally speaking.
Yeah, exactly. And in most countries, you're only allowed to pay dividends once a year, which is after the full annual
Yeah, and you have
accounting
the
cycle.
AGMs that approves it and all this. So you
Correct.
sorted out this part. That's amazing. I didn't know in Switzerland it was you had such flexibility in the corporate and bylaws of a company.
Yeah, I mean, there's a couple of things that you would think in a traditional company. You have to have this physical shareholder meeting, you have to have the physical votings, and all this is, for example, for us on chain. So we changed and combined the statutes and the bylaws with a smart contract so that every shareholder resolution can be done on chain on a smart contract. And the other thing, as you just mentioned, dividends can not only be paid out once, but for us it was important that people do receive the Bitcoin dividends on a regular basis. Yeah, for us this is now quarterly because we do have a process that is semi-automated and partially still needs some votings of the shareholders. But parts of that is also ingrained in the shareholder agreement, which basically states if we have profit, we pay them out in Bitcoin and dividends. So there's a lot of these things that needed to be thought through, and you're right, that was definitely a complex process, but I'm very happy where we got. I think we also, were quite courageous trying out a few things. We didn't sit in a basement and try to figure out the perfect way, but we actually, since day one of the holding company, GM Data Centers AG, the shares are tokenized. The resolutions were done on chain. We did pay out Bitcoin to our investors, I think already after the second or third quarter. So we
Okay.
executed all of the portions that make this business model and this concept unique. We already executed them and practiced them. And that was very important for us because we didn't want to just do it theoretically. We wanted to do it practically and really, learn and be able to do it.
Yeah, so we talked about the legal part, and then you have like the tokenized part. So how did you tokenize this share? Like this is like more a technical part of it. So each shareholder has like 1,000 shares. What does he get in as a token? What kind? How does this process works?
So every share or every token is a representation of a share in the company. So the amount of shares is directly correlated with the share capital of the company. And in the beginning, the company had 10 million shares and therefore 10 million tokens. And then with every single capital increase that came through an investment round, the amounts of shares are increased. So we're not per se in a space where we say this has only 21 million shares and it will never be more or less, but it can be more if there is additional capital raised. But that also means that the increase of tokens, so a dilution of others, only happens if more share capital enters the company. And that's the process that we chose to make sure that every token is represented by actual value in the company. And with the value appreciation of Bitcoin miners, of the energy contracts, of the data centers themselves, or of these wonderful mangoes, the share price increases as well, but it's always backed by real world assets. And yeah, that for us is the way to do it, not minting tokens, out of thin air, but tying them to real assets.
And then the token are listed, or they just held by the owners, or they can put them on a decentralized exchange. How does it work?
Right. So we have had conversations. So first of all, they will be on a decentralized marketplace. So we're not yet talking with the Coinbase and so forth to launch them there. But our idea is have it on a decentralized exchange. And for that, we are partnering with a company called Greenpact, which is providing us with the infrastructure and with the liquidity pool. And the company itself is providing. So the last step of the fundraising. So for example, we're right now raising the capital for our third Bitcoin mine, Green Mine Free. And we have a main target of 2 million Swiss francs and a maximum target of 4 million Swiss francs. So that decides a little bit on how big the mine will be. And it's going to be a Bitcoin mine operated by sustainable energy and reusing the heat to dry fruits. Yeah, that is the package. So it will have a dual business model, one coming from Bitcoin mining and one coming from the sales of the fruits. Now, this itself is a three-stage fundraising process in which each of the three phases has a different bonus structure. The first investors, which are the most courageous to step on that, get 15%. The next ones in the second phase, 10%, and then the last phase is the main prize. Now, once this is concluded, we do a last step, which is the creation of a liquidity pool in which the company itself takes capital to increase the share capital by about 10%, and that 10% of actual capital and shares will be put into the decentralized liquidity pool. And that's how we make how we provide liquidity and how we actually make the token tradable from once the facility is set up. So that, I hope, answers your question about listing and shares. That being said, we are in conversations with security exchanges and have thought that process through. Do we want to get onto, I don't know, Bitfinex securities, for example, and so forth? And I think there's a possibility that we go ahead or do that. That being said, we're still early in the phase of the company, and our main focus is on building out these sites and delivering a great dividend to our shareholders in Bitcoin and Bitcoin Mangoes.
Okay, I see. It's quite interesting how you mixed the mango business with it. It's quite new to me. Just to take a step back, I feel like the retail part of the business is a big part. So you want as many customers as possible. Why did you go for this kind of setup? Why didn't you just find one big fish, like one investor who can put 10, $20 million, and you set up the company and you deploy the Bitcoin mining, and you just have high net worth or or big deep pockets investors rather than going through retail? Why do you think the, there is more appetite, or philosophically maybe you have your reasons behind it?
Yeah, I'm not really sure if there's more appetite from retail investors or than from big ones in regards of the amount of money. But first of all, I want to say we did never say or decide that we want to have many customers. So the way we see it is we're not selling to customers. We're joining with entrepreneurial thinking investors that we're becoming partners with. So we don't see anyone as our customer, but we see us as aligned shareholders. And the reason behind it is maybe goes back to what I mentioned before. I personally think that current Bitcoin mining opportunities that are available to smaller investors are very often letting them stand in the rain, be it from the pricing perspective or taking care of the machines themselves, and we personally want to make it more fair and more available to smaller investors, and that's the reason why we chose our setup. I'm not like, obviously it comes with communicational challenges. It comes with taking care of many people rather than one big fish, as you mentioned. So, but we think the distribution of wealth is very important for a more sustainable and fair world. And this is one way that we see. So if Bitcoin one day becomes the superior store of value, or the Bitcoin network, maybe in combination with Lightning, also becomes a very important infrastructure for daily exchange of money, of assets, and so forth. If that's 10, 20, 50 years in the future, and only, as you mentioned, big fish or high net worth individuals have been mining Bitcoin at, and we saw that earlier in our conversation, half the price than retail is getting the Bitcoin off of exchanges, then I think this will not really help the fair distribution of wealth. And we do have a challenge with that. And I think that, let's say, different distribution of wealth, or the wealth distribution as it currently is, feeds into global challenges, be it conflict, be it, oh, sorry, it's still early here in Asunción and my English is not perfect, but refugees. So if it's refugees coming to countries, and then that's creating a situation within the country itself, be it politically or economically, and again, various other challenges that we see, I think may also partially come from the current distribution of wealth. And Bitcoin can be an asset where, by providing energy or value for value, which is, I think, a very nice a way of seeing it, this can fix it, right? Bitcoin can have a positive impact on all of these challenges, or many of these challenges. Maybe not solve them all by itself, but in general have a positive impact. And again, if then this is only in the hand of a couple few, especially the production, I think that's not the right way to do it. And that's the main reason why we were organizing Green Mining DAO in a way where retail or small investors can get access to that asset and become part of a shareholder, or become shareholder of the company, and benefiting directly from the business model itself. Does that answer your question? I may
Yeah,
have given
yeah.
you.
I mean, at the end, it sums up what I really like about your model. So, Bitcoin mining, because you're mining Bitcoin at an interesting level compared to where the price is. Green, because we want to live in a sustainable world. So, we want all this energy and these funds to go towards green energy. And DAO, and your name is like sums up the whole decentralization and wealth distribution. So congrats again for your business plan. I really like it, and I'm gonna wrap it up here. Thanks a lot for joining the show, and I look forward, Sascha, to have you back on the show as soon as you have anything new or any developments in your project. Well done again.
Fantastic. Thank you so much, Jed, and a pleasure and honor being here. Thank you.
Ciao, ciao.